G'day everyone, welcome back to Pete's Investing. Today is April 7, 2023. This is the Aussie dollar and Aussie US dollar update. As you can see here on the daily, the 4 hourly and the hourly time frame, on the daily and the 4 hour, we're in a downswing according to the CCI 1500 with the moving average 400. And on the hourly, we've just broken below the moving average, so that may turn into a downswing as well on the moving average. Let's drill down on each of the time frames. We've got here a resistance at 71.57 and a support at 65.64. Now there is also a ascending and descending trend line. It's causing this wedge. You can see there it's sort of bouncing almost off that lower ascending trend line. You'll notice also on the CCI, which is our key indicator, we take that predominantly in the direction of its trend to take trades. We don't, in this case, we're not going long. We'll be taking short trades only based on the daily. On the 4 hourly, you can see that more clearly. It's still in a downtrend. It broke up and then broke down again on the CCI moving average, and it's currently just about touching that ascending trend line. I've drawn a Fibonacci retracement here. You can see that little gain there when as high as 38%. Our key level of potential reversal would be the 61%. So if it goes much higher than that, we'll see a potential reversal and to the upside. On the hourly chart, I've got here, let me just remove those fractals for the moment. It's also in an uptrend at the moment, but at the moment it's broken just below the moving average, and it may turn into a descending moving average as well if the price to the downside continues. The key area here will be this ascending line, as we said. If it breaks much lower than that, we'll see that continue to the downside, and further shorting positions should be taken. Now I do have also a trading idea in the direction of the overall trend, so in this case we'll be cautiously going short. Just be mindful we may see a bit of a bounce off this, but let's go back to a bit more history here. If we were going according to the overall trend on all three timelines, we'll be going short. So you can see here whenever the candle breaks below the fractal, we take a short entry. Now I usually take a percentage gain for profit taking and get out of the trade that way. You can use any particular method of exiting, but I usually take a percentage gain without that way. If it goes against you in a moving average, you're not caught out with a position. Now if the price does break to the upside, like let's say for example you went short in that area there and the price went against you, if you didn't take that little profit there, then you can actually average down, and I use the average down approach. And one method of trading this would be I don't re-enter the trade unless it retraces back at least. Let's say we went short there. I re-enter the trade when it goes by at least 5%. Re-enters a short position, at least 5% retraces to the upside. So in other words, had the price retraced back up there somewhere and it showed a further downtrend, and again making sure we're in a downtrend motion, like in this case, I'd re-enter it back at that point. In other words, I wouldn't enter a second lot of contracts just in that little range there, even if it went against you there. Now in this case, the price went back, you'd be in a negative for a while, then it went forward again, and you would have been ahead of the game with a little profit gain had you stayed in the trade. To understand how to properly trade using the average down approach, reference the links in the description below. Subscribe and like the channel. Support us more on Patreon, and I'll see you in a future video.